Welcome to a very special webinar today about the Quant Cycles indicator, which is a brand new indicator which performs a cyclic analysis of the financial markets. My name is David Hickson and I'm joined in today's webinar by John Rawlins. Before we take a look at the Quant Cycles indicator, I must ask you to please make sure that you have read and understood these disclaimers. So let's start speaking about the Quant Cycles indicator. And now in today's webinar, I've been very professional and we've organized an agenda. So we have some things to speak about so that you know where we are in the webinar. The first thing that we're going to speak about is the background to the development of the Quant Cycles indicator. You've probably heard by now that this indicator has been in development, or it has been developed, I should say, over the past 38 years. It's an extraordinary story, and in a moment I'm going to ask John Rawlins, the creator of the indicator, to tell us that story. Then we're going to touch briefly on the mathematics behind the indicator, because it uses a very advanced mathematical approach, and that is what really distinguishes the Quant Cycles indicator from any other indicator out there, is its advanced mathematics. Then we're going to speak about the use of the indicator, and we're going to do a little bit of chart study. We're going to look at some charts with the indicator on them. We're also going to speak briefly about making trading decisions using the indicator and how it can be used to make trading decisions or to enhance the trading decisions that you are making. And finally, we're going to speak about the different flavors of indicator that are now available to you for the first time on the NinjaTrader platform, and there is also a platform agnostic solution whereby you can log in and look at end-of-day analysis online. So let's say hello to John Rawlins, who's the creator of the Quant Cycles indicator. Hello, John. Can you hear me?
I hear you fine, David. How are you today?
I'm very well, thank you. And now, of course, I'm speaking to you from rural Italy, and I believe you're in Georgia, Atlanta. Is that correct?
That's correct.
Okay, so we're on almost opposite sides of the world. It's wonderful that we can get together and communicate online. Thank you so much for joining us on today's webinar.
Thank you.
John, you can see the details about John there on the screen. He's a former member of the Chicago Board of Trade. He has more than 40 years of experience in trading and research. And of course, the reason that we're here today is because in 1978, he was inspired by a book written by J.M. Hurst, The Profit Magic of Stock Transaction Timing. And having read that book, he was inspired to create the Quant Cycles indicator. So John, do you want to tell us a little bit about the story of the background to how the indicator was developed?
Well, it's very interesting. I had started trading commodities from 1975, 1976. My background was from a farm in South Georgia, so I always had an interest in soybeans and corn, and got inspired to trade and invest in commodities. And right. I was also a war skier. It was my hobby. And I met this engineer that turned out to be one of the top aerospace engineers in the country, and he and I shared the same hobby. And after a couple of years of just being friends and skiing and doing things, I found out that he did some trading and investing in stocks and commodities, and he found out that I was interested in commodities. And I had read the book Profit Magic of Stock Transaction Timing by J.M. Hurst and presented this book to him because I knew he had a math and engineering background, and showed him some of the parts of the book that dealt with spectral and Fourier analysis. And he was very familiar, in fact, using the types of Fourier technology in his engineering applications, and became very interested in how he might could apply this to data. So I went out and got, I think, 20 or so years of weekly copper and soybean data. Wow. For him to actually start testing some of the algorithms that he was working with on. And That was the beginning. That was sort of how we got started.
Okay, and you sent me some great photographs of your first computers. There we go. That's one
Yes.
of them. I can hardly imagine what it must have been like trying to solve the mathematical problems of the financial markets using a computer that looked like that. And there's another one here. Let's see if the system. There we go. A very early Hewlett-Packard. Do you want to just spend a moment telling us a little bit about the mathematics behind the indicator?
Well, in the beginning, we were using the basic FFT or fast Fourier transform applications, and they were limited by the length of data that you had to work with. For example, 256 data points or 512 data points.
Right.
And in understanding cyclic behavior, you weren't able to capture the true cyclical influence in the data. In other words, you were basically cutting data into pieces, and you weren't able to capture the true cyclical summations that were maybe giving you an accurate forecast. And that's why traditional Fourier has its limitations.
Yes, that's right. I know. I spent when I discovered Hurst, and I'm sure many people have traveled a little down this path. You start doing some Fourier transforms, and as you say, it has limitations, and it can be frustrating. So you've applied an advanced approach to doing that, and here we are with an indicator that is now available in NinjaTrader. It's going to be available in other platforms soon. I know that you and your developers are working on bringing it to some other platforms. Let's take a look at this indicator, and we have some charts here. Here is a chart of the ES Mini. Let me just zoom out ever so slightly so that we can see it a little better on the screen. There we go. A chart of the ES Mini, and at the top of the chart is of course a traditional open, high, low, close bar chart, the prices. And at the sort of lower 2/3 of the chart is the Quant Cycles indicator. So do you want to tell us, John, what all those lines are?
Well, in understanding that only a certain percentage of markets' behavior is cyclical, and most of the behavior is influenced by random volatility, random noise, and current events. So we're extracting the cyclical summation, which is portrayed historically by the center blue line.
Right, so that's that line.
When it turns green into the future, that is the future forecast, if the projection is up.
Okay, so it's green if it's up. Okay.
Yes.
Yes.
And the top two lines are the first levels of resistance.
Okay.
And the bottom two lines are our lower support levels.
Lower support. So so this center line is an idea of what the cycles are doing to price. Is that correct?
Correct. And then the black line represents price. That is the detrended price representation.
Okay, so the black line is a detrended price representation. That's right, you did explain that to me previously. It's a detrended price representation, that black line. And then this very nice smooth line is showing us the result of the cycle influence on price. And of course, as John has mentioned, there are many other influences on price. It's not only cycles that move financial markets, but that is the composite, if you like, the summation of all the cycles that are influencing the markets. And when it moves into the future, it becomes color-coded. So green indicates that the cycles are pushing upwards, and red it would indicate that the cycles are pushing downwards.
Correct.
And up at the top here, you have your two levels of resistance for the detrended price, and down at the bottom here you have your two levels of support. Fantastic. So and I also noticed there is a label there in this particular chart. It says 3 days 20 hours. That is presumably an estimate to the amount of time left until the cycles will be peaking. Is that correct?
That's correct. That is a turning point that we indicate.
So that enables you to anticipate the turning point. And
I would like to explain that what you're seeing is just the current graph. The amount of data used to generate this analysis is using thousands of data points. So you don't see all the history being used. We're just looking at the current graph, because this is not 3 lines of code. This is many, many thousands of lines of very intense math. And so we're analyzing a lot of historical data.
Yes, absolutely.
But it's really nice. But it's really nice that we get to see this one image at the end.
Yes, absolutely, and that's a very important point. Most oscillators that sit at the foot of your chart are looking only at the current price, or they would have some kind of a look back period. Most oscillators will look back several bars. One of the big differences, obviously, with any cycle analysis is you need to be looking at a lot of history, and that's exactly what this indicator is doing. So. Now that we understand what we're looking at, and of course in NinjaTrader you can adjust your settings, so you can be looking at a white background chart such as this one, or you can be looking at a black background chart such as this chart, if the system will show it to me.
Correct.
There we go. Okay, so here is a black background chart. This is the again the ES Mini, and now we're going to start speaking about using the indicator to start making some trading decisions. How do you make trading decisions, or how do you use the indicator to do that? So, John, do you want to explain what we're seeing here?
Yes. Whenever we have the projection and the bands, and we reach an extreme from the band or from the center cycle, it paints a shaded area to give us an idea that we've reached an extreme and a high probability of a reversal or a turn and rejection from that point. Because again, this is a cycle summation, and we're looking at any kind of departure or anomaly that gives us an opportunity for a lower risk trade, whether it's a buy or a sell. Right. And in this case, for example, we reached the lower extreme, the lower support, with the projection going up. In other words, the line was green and we departed to the lower extreme. Yes. And that created the paint, and so it would give us an indication that there should be a reversal and move in the market back to the upside.
Back to the upside. So just to sort of clarify that, here's our green line indicating cycles are pushing up.
Correct.
And here is price coming down to the lower support line, that green line, and here we have the opportunity zone, that sort of translucent blue bar that appears, indicating here's your opportunity, because we have the opportunity to catch a move upwards in the market. So shall we move on and take a look at the next chart? The date of this chart was the 19th of October, and this is a 4-hour chart. So each one of these bars is 4 hours. So we'll move forward to the next chart, which was on the 23rd of October, so 4 days later. And of course, here is the moment that we were looking at in the previous chart, and you can see what happened in price. I'll let you explain, John, what happened.
Well, it first of all came back to the center cycle summation area,
right,
and it went in the direction of the projection. So we had a really nice move. And I also want to stress that we don't always reach these extremes. We're focused more on the cyclical projection and the direction. So when it moved back to the upper level and the line turned red, that would indicate now that we should see prices move lower into the future.
Okay.
And we were looking at this as a 3-day and 12-hour turning point into the future.
Yes. Okay, so there's that turning point in the future, 3 days and 12 hours. So And that's a really important point. John's mentioned it to me before. You don't expect price to always reach the extremes. You don't sit around and wait for it to reach the extremes. When that line turns red, the cycles are pushing downwards. Okay, so price doesn't have to get up to the extreme every single time. It's not like a relative strength indicator, perhaps, that you always expect to get into overbought or oversold territory. So this was the 23rd of October. Let's move forward to our next chart, which is the 25th of October, so 2 days later. And let's just quickly retrace our steps for a moment. Our first chart was this opportunity. Oops, That wasn't the pen, that was me dragging the chart. Wasn't very clever. Okay, so that was our first trading opportunity there. And the previous chart that we looked at was over here, I believe, somewhere over here, where the cycle line turned red and it projected forward 3 days, if I remember correctly. And so now here we are, 3 days later, and looks like the market has come down as expected.
Correct. And again, when we reached this lower level and the line turned green,
yes,
you would expect the market to move back to the upside.
Right. So we've got a few things happening here. We've got this turning point is only 4 hours in the future, if I'm reading that correctly, and price has come all the way down to the lower support level again, and our cycle line is green. So again, we are looking at a reversal to the upside because the cycles are pushing upwards at this point. Let's move forward to our next chart. This is now the 31st of October, and John, perhaps if you want to speak about what happened here.
Yes, what happened was you got the reaction off of that extreme on the bottom from the lower support. We moved higher, and in understanding how this works, if we move to the upper resistance level, even in an uptrend, you would not want to necessarily be short, but you would want to recognize that you're overbought in an uptrend. That's the way you would describe what's going on here.
Okay, you're overbought in an uptrend. That's an important concept.
And so so you can see it did pull back, but the projection is still higher. So even though you had a pullback, you would expect the market to continue to go back up. So in learning how to trade and use this program, I've always, even if I went long at that lower extreme and you reached the upper resistance in an uptrend, you would probably want to trade out of your long position because there's a higher probability that you would get at least a pullback.
Right. So as that detrended price approached the resistance level, you're in an uptrend, but you might want to start taking some of your profits or getting out of that market because you're expecting a pullback within the context of an upwards trend because your line is still green.
Correct.
Okay, so there's that pullback. We still have a green line, so the cycles are still pushing upwards. And, of course, the market has been pulling back into that. So let's move forward and take a look at the next picture here. 1st of November. So what's happening here, John?
Well, again, it did push up with the projection, as it was indicating. But now it's turned red. And so I've indicated with the down arrow that there should be downward pressure over the next several days.
Right. So the cycles were still moving up, and this sort of rough circle is where we were in our previous picture. We had the pullback down to that level, and the market did continue upwards, but now, importantly, this line has turned red. And as this arrow indicates, we're looking at the markets turning downwards again. And let's move forward. And where are we now? The 3rd of November.
It still hasn't rolled over.
Still hasn't rolled over, right.
But in understanding that this is a cyclical summation of the probabilities, and as long as that red is projecting lower, you would still want to be finding, if where there's taking a short or you're trading it with the understanding the market should go lower. So we'll just see, in the next chart, see what happens.
Okay. And let me move forward to that next chart. Here we go. And here we have the summary of everything that we've spoken about. Is that correct?
Correct.
Okay, so you can see all the green arrows indicating opportunities for the market to move up, and all the red arrows, which are the moments where you are certainly preparing yourself as the cycles turn downwards. And here is that cycle line still pressing downwards. So that gives a fantastic idea, I think, of the very simple application of the Quant Cycles indicator. And in a moment, we'll take any questions and we'll answer any questions that you might have. The true power of the indicator, in my opinion, is the way that it is consolidating so much data, and I know how much data it takes to produce a cycles analysis. It's what I've been doing for many years, and there's a tremendous amount of data, and the beautifully simple way in which you can then use the results of that analysis in terms of using your cycle line and watching where this deep trended price goes relative to the resistance and the support levels, which really helps you to use the information to make sure that you're trading in the right direction, which I think is probably the most important aspect of the Quant Cycles indicator.
Yes. Yes, this is a major, in my opinion, a filter to keep me in an understanding of the direction of the market, and how I then use my other tools to trade with that direction.
Absolutely, yes. So to make sure that you're trading in harmony with the waves and with the cycles,
Right.
so you're going along when the cycles are pushing upwards, which increases your chances. And as we all know, trading the markets is a matter of increasing your chances of being correct and trading in the right direction. We will definitely be looping back and speaking and answering all of your questions. But before we do that, I'd like to speak about another very important aspect of these indicators. Well, John is going to speak about them, and that is the way in which you need to work with multiple time frames. Now, John, here I have charts ranging from weekly all the way down to 5 minutes. Would you like to speak through the importance of working with the multiple time frames?
Yes, absolutely. In all of my trading history, I've always incorporated multiple time frames because I'm always wanting to know what the analysis says, starting from a weekly down to a 5 minute, so that I have a better confidence of the trend and the direction and where we are in relationship to the extremes in that specific analysis. I am looking at a shorter term trend, and I'm looking for a trading scenario. Is it confirmed by my larger time frames? And we had gone through the previous series of a 230-minute E-mini. That is a good balance between some of the intraday analysis and the daily weeklies, because it's been able to catch the trend and give you good, very good supportive analysis when you've reached an extreme. But I always, when I'm looking for a trading entry, I might go back and start with my 5 minute or 15 minute if I'm term basis. But if I'm swing trading and looking at a 3 to 5 day horizon, I might look at the 60, 240, and then where we are with the daily.
Right, so here we're looking at a weekly chart of the euro to US dollar. Is this where you would start thinking about the cycle situation?
Yes, and my first interpretation of this is that the weekly is still projected higher. However, we've reached close to our first level of resistance, so I would expect a short-term pullback. So from there, I would then go to the daily, and let's see how we look with the daily.
Right, so here's the daily chart.
Okay, and the daily confirms it. The daily says that the euro should have a short-term pullback over the next couple of weeks, and then resume its uptrend. This kind of confirms thinking that we are again in a position we should have a correction and be looking to re-enter from the long side in the next 2 weeks.
Fantastic. So now we move down to the next time frame, which is the 240-minute time frame.
An opportunity bar painted, which is saying we're at the resistance. Even though the trend is still projected a little higher, the very, very short term, the reason it painted was we're flat or a little bit, even on the short term, very, very short term, a little bit negative. But overall, I would expect a pullback based on this, based on the 240.
Right. Yes, because the detrended price is right up there at the top, the second resistance level, and there we have our opportunity zone painting. Let's move down to the next time frame chart, which is the 60-minute chart.
thinking that coming into last night, the euro was a little overdone on the upside, and we would see a correction.
Okay, so things are looking bearish on the 60-minute chart. And then you would step even further down and take a look at the 15-minute chart. Is that correct? Here it is.
And if you were looking at trading the 15, you were actually looking at a very short-term rally. But overall, I still go back to my longer term, which says that we would have a option but still be in the uptrend. You want to end up buying the euro, but I still would think that we would have a larger correction based on the daily and weekly, and especially where we were on the 240.
Right. So your longer time frames are definitely indicating a bearish or a short trade is in order, and perhaps the shorter time frame is indicating a fairly good time to be thinking about entering that, because of course the market at shorter and shorter time frames keeps bouncing up and down, doesn't it? So let's take a look at the shortest time frame here, which is the 5-minute time frame.
And again, the 5-minute, is for people that are trading very, very short term. And if you've been looking at this last night, which is when I did this chart, you'd have been looking for the market to trend higher with the 5 and the 15. And you would need to really be seeing those refreshed and up to date or live, as I have it with NinjaTrader, so that you could see where we are, at this specific moment in time.
Okay, fantastic. And I see a question from Claudio asking, would you be biased to the short side? So I think I'm correct in saying the answer to that is that it depends on your time frame, of course, but the weekly and daily and 240-minute charts are definitely indicating you should be biased to the short side, and the shorter time frame charts are indicating that the market might pull back and give us a better entry opportunity, perhaps into those short trades. Would that be a correct way of interpreting this, John?
Yes. Looking at the weekly, the bigger picture is bullish, but the very short term is negative. So I wouldn't necessarily be an aggressive seller, but I would certainly be looking for a pullback in which to buy. So because I would still like to play it based on the weekly more from the long side. But
okay.
If you're a 5-minute trader or 5-minute and 15 combination, you're interested in what's happening in the next 2 hours, not necessarily what's going to happen in the next 2 weeks. So you're looking really at what I call the here and now in the marketplace. You're not trying to be too far into the future when you're a 5-minute chart.
Absolutely, and that's such an important thing about trading with the cycles, is it all has to do with your time frame. I'm sometimes asked by friends, what's going to happen to gold? Is it going to go up or down? And it obviously depends on your time frame, because are you speaking about the next couple of hours, next couple of days, weeks, years, decades? It really depends on your time frame. I see some other questions, and I've made a note of them, so we'll loop back to those questions. But we wanted to speak about something very important, which has to do with the repainting of an indicator. So I have two charts here, and the first chart is a chart which is repainted. John, would you like to speak a little bit to the concept of repainting an indicator?
Yes, and understanding the analysis that we have and the way it extracts the cycles from historical data. First of all, we detrend or smooth the data so that the analysis is really on the detrend plot rather than the detrended data rather than the actual analysis. So it gives us a very good harmonic for timing, much better than price sometimes. But in working with this on a live platform, a lot of people have always asked, well, when you redraw the lines, it seems to change and become much more conforming to the past history. And that's because when you run the type of calculation, the derivation of the Fourier analysis that we're working with, you get a current picture that's reflecting the cycle summations of that database right here and now. So we have the option in NinjaTrader to not repaint, so that you see the current forecast, but you also see exactly what it showed in the past to see did it really fit within the curve that you were predicting. So this graph has been repainted. This is the complete cycle summation at that point in time. Now, this chart is the repaint. I mean, it was without the repaint, so that you see the current analysis just like the other one did. However, you can see exactly what it was showing in the past, and did it, was it accurate in its analysis and projection? And what is great here is it'll actually, when you do a repaint, give you an indication as to where our opportunity zones developed when you reached extremes. And if you can see in almost every case, that would have given you a good indication of a reversal. So you had 4 or so repaints, and the first 2 were sells and the second 2 were buys. So this would have been a helpful analysis. And this is, again, this is is exactly what you would have seen had you been running this live in our platform.
Right, so let me just see if I can get this pen just to highlight that in case you can't see that. So this chart that we're looking at here has not been repainted. You're able to set that. And here are the opportunity zones for the short trade there, and here are the opportunity zones that were painted at the time for the long trades, for those trading opportunities. So let me just go back. This is a chart that has not been repainted, and this is a chart that has been repainted. So we could flip back and forth. There are obviously differences, but if keeping an eye on what has happened with the repainting and not with repainting is important, you can see the fairly subtle differences here. Okay, so let's just speak about. Let me go back here, and let's quickly, John, just loop back and answer some of the questions that have built up. There was a question really early in the webinar from Hoob asking, do you use autocorrelation instead of the fast Fourier transform, which ties in with a question I received by email asking if you could touch a little more on the mathematics of the indicator.
Well, this is not a traditional FFT. This is a proprietary algorithm that is a variable length floating transform that allows us to float within the data and extract the cyclical summations or extract the amplitude, phase angle, and frequencies of the cycles and give a resolution and a graphical display of what it would say should be happening within the bands. So we are not trying to, well, first of all, the overall total analysis process is looking at different amplitude, phase angles, and frequencies and really being able to measure their shift over time so that we can determine whether there is noise versus true cyclical behavior that we're able to work with. So we are focused more on the consistent cycles that we find, the way the algorithm approaches and analyzes the data. And again, we're looking at as much as 10, 12,000 data points in some data sets. So this is strictly a derivative of the Fourier analysis, and no one else has this algorithm. This is a very unique and proprietary algorithm.
Right. So let's move forward, and we'll come back and answer some other questions about the indicators. Let's speak about the pricing of the indicators. There are 2 flavors, as has been mentioned in the videos that you've watched. There's an end-of-day version. I see a question about the end-of-day. How often do the daily and weekly pictures on the site renew? The daily pictures renew every day after the closing of the day's trading, and the weekly update every week. That's the end-of-day version. And there is also a live flavor, which enables you to have the indicator running on your NinjaTrader platform. And there is the pricing for the indicator. It depends on how many sectors you want to trade. So, for instance, forex is a sector. And includes multiple different forex pairs, and there are many different sectors, as you will discover on the Quant Cycles website. Now, as I have mentioned, and possibly one of the main reasons that you're here on today's webinar is that John has very generously offered a discount to our Hurst Cycles community, and that discount is a 50% discount on the price of the indicator. That's a half price discount. And so if you identify yourself as coming from the Hurst Cycles community, then John will provide the indicator to you, either flavor, the end of day or the live flavor of indicator, at a half price discount. It's a fantastic and very generous offer. It's a time limited offer. It's only going to be available to members of the Hurst Cycles community during the launch of the Quant Cycles indicator. So make sure that you jump on this offer as soon as you can. Now, in order to claim your half price discount, you need to enter the discount code Hurst, H-U-R-S-T. I'm sure you know how to spell the name Hurst. So you need to enter that discount code, and that will qualify you for a half price discount. So you need to go along to the Quant Cycles website. You'll see that there, https://quantcycles.com. Now, if you add there the /ref equals 2 that you see in that website address there, then that will identify you as having come from the Hurst Cycles community. It's not absolutely required, because you can claim your 50% discount by simply entering the discount code Hurst. However, if you add that /ref equals 2, then that will identify you as having come from the Hurst Cycles community, which means that if you have any queries about your order, then the Quant Cycles team will be able to identify you immediately as having come from our community. And of course, they are giving our community preference. So I would recommend you do that, but it's not absolutely necessary. So go along to Quant Cycles and take advantage of your half price discount. There are a few extra details, a few cherries to add to this cake. The first one is that John has offered a 14-day money-back guarantee. That's a no questions asked guarantee. So this is really a risk-free investment that you can make. You can jump in and start playing around with the indicators, knowing that you have 14 days completely risk-free. There are a few other things to add onto this special offer. The first of which is very exciting. It's a 62% discount. If 50% is not good enough for you, John is offering a nice Fibonacci 62% discount. Now that discount is being offered if you take both the live flavor and the end of day flavor. So you subscribe to both of those, and you subscribe to all sectors. That's, I believe, an $800 a month value, and you can claim that at a 62% discount for $300. If you enter the code when you select that full package, you need to enter the code Hurst-all, just like that. The word Hurst hyphen and then all in capitals, and that way you can claim your 62% discount on the full package. That way you are taking everything that the Quant Cycles indicator has to offer. And there is a final and fantastic addition to this offer, which is that for the first 100 subscribers, the first 100 people who subscribe to the Quant Cycles indicator, either flavor, end of day or live, John will be emailing you the opportunities. In other words, the instruments that are entering into opportunity zones, that are providing the best trading opportunities. John will be emailing you those opportunities when they occur. It will take the form probably of a daily email. So in other words, when the instrument enters into an opportunity zone on the daily chart, you will be emailed those opportunities so that you are made aware of them. That's a fantastic additional feature which has a $99 value, and John's going to be providing that completely free to the first 100 subscribers. So please get along to the Quant Cycles website and take a look at the different sectors that are on offer. Choose your flavor, enter your Hurst discount code or your Hurst-all discount code if you decide to go for everything. And if you are in the first 100 subscribers, John will also be emailing you your opportunities. Let's get back to some of those questions which are still coming in fast and furious. Armand asked, what about looking at monthly charts? Is there any value in looking at monthly charts, do you think, John?
Well, absolutely. The articles that I've published since 2003 that have been the most accurate for real long-term forecast have always used monthly data. I have an interpolated value of the Dow Jones going back over 250 years, and it's been very helpful in coming up with very long-term forecasts, because it's finding cycles that are constant over time, as opposed to working with some of the shorter-term data, which incorporates a lot more noise. But it allowed me to make some forecasts for 2 and 3 years into the future using that historical monthly data.
Okay, fantastic. So, of course, if you're working with longer term data, you first of all need a lot more data to do the analysis, obviously, and you're able to look further into the future, but probably with less detail. I hope that makes sense. A couple of other comments and questions. Ball Trader suggested comparing the results from this indicator to the subject of Hurst Cycles webinar previously. So that's a question or a comment that I can speak to. Yes, definitely, Ball Trader. I have the pleasure of working with these indicators now, and of course these indicators take a mathematical approach to an analysis, whereas all of my analysis work is a pattern recognition approach. Two very different approaches to the same thing, which is understanding what the cycles are doing in the market. And for me, it's absolutely fascinating to see how they work when used in combination. So definitely look out for some future webinars in which I'll be looking at the comparisons and discussing the two different approaches and comparing them. So thank you for that. And Dimitri mentions taking a look at crude oil. Dimitri, I apologize, we don't have any crude oil charts loaded up for this webinar, but of course crude oil is definitely one of the instruments that is offered through Quant Cycles. So we won't be able to take a look at it now, but it's something that you can do through the Quant Cycles site. And William commented that the amount of error in repainting is proportional to the time frame used, which is a really important point to note. When you are looking at your indicator, you need to be very aware of what time frame you're working on, and bear in mind that the different time frames will have different amounts of repainting, as the different time frames provide you with different views of the market in terms of how far ahead you can look. And some interesting comments from Elaine about the fog of trading. Indeed, no trading is made with 100% conviction. It's all about seeing through the fog a little bit and changing the odds in your favor, I believe. That's certainly my approach. Adrian says, how do you determine the accuracy of the forecasts that the software makes? I would have thought it's really a matter of trading results perhaps, or seeing how things play out. Do you have anything to say about that, John?
Yes. Again, I use multiple time frame. The decisioning is off of a 15, 60, and 240, and combining those so that when they reach extremes together, you have a very high probability of a directional indication to implement your trade. So having said that, I mean, I have studies on different time frames on a minute basis where if you trade every signal over a given period of time, you have a lot more right answers than wrong answers, or right or positive trades versus losses. But again, that's because it's in working with a 5-minute frame, you're working with a lot more noise and a lot more volatility, as opposed to a 240 where you might get fewer signals if you wait for the extreme. So the way you measure your accuracy, in my opinion, is how far do you want to wait, or how long do you want to be patient for your trades. And that's why I used to call, I would have lines on the chart that I would call patience lines, because if I'm patient and wait for the analysis to reach those extremes and then trade in the direction of the forecast, I have a very high probability of a winning trade. So
yes.
it all
Okay.
depends on how patient trying to take every, sorry, go ahead.
No, I think you've made a very good point, which is, you choose your time frame, and you're not taking every trade that you see on every single time frame. You're picking and choosing your trades, and the accuracy of the analysis shows through the profitability, or how using this information affects your trading. There are a couple of other questions there. Jim asks, are there sound alerts for the blue highlights or other lines on the NinjaTrader chart? Do you know anything about that, John?
We haven't programmed a sound alert. We are programming an aspect that will alert you right now with a notation. But that is one of our next features to have in NT8, I believe, is so that you can have something similar to TradeStation, where it's able to track and follow every time frame as to when they might reach their extreme. So that what I love to have is an alert that would say my all time frames have lined up at an extreme,
yes,
with the direction of the slope indicated. So it would be a great tool.
Yes, absolutely, and I think the important thing is that once you have an indicator such as this on NinjaTrader, there's quite a lot that you can do in terms of triggering alerts and enabling other features. And as William points out, it's very easy to create a strategy analysis in NinjaTrader. In other words, it will put together the different timeframes. Perhaps you can build a strategy around it. And there's another question that I saw who asked this. Brian asked, what about performing a cycle analysis on a moving average as opposed to price itself? Any comments about that, John?
Well, we've talked about that, and that's something that I will probably test in the near future. But up to now, we started off with detrending the data, which suffered back in the lease. By virtue of detrending the data, I'm able to get the structure of the analysis in a 0 to 100 scale and extract a lot more cyclical behavior.
Right.
So that's been the basis, and then combining this analysis with some other tools or momentum analysis to confirm that the trend has changed, or the direction that I'm trading in the direction of the momentum.
Okay. Yes. So an interesting point. Thank you. Let me see. How far did we get? I'm trying to identify our position. Ball Trader says that the Quant Cycles website does not list the computer requirements, CPU speed and memory, etc. Ball Trader, that's because the indicators sit within the NinjaTrader platform. So if you are able to run the NinjaTrader platform, then you can run these indicators. Or if you're going for the end of day flavor, all you need is a browser, because you will view the charts in a browser. So you don't really have any computer requirements. I hope that answers that. David F. asks, what's the ETA for the MT4 version? David, after getting a lot of questions about that, I actually jumped on the phone and asked John that question myself, and they are working on it already. So it is expected soon. I know as a software developer, it's very dangerous to say it's going to be ready next month, because software development is as long as a piece of string. You never know what problems you're going to encounter. But the MT4 version should be available soon. It has been mentioned, the concept that it might be available before the end of this year. But I don't want to, on behalf of John, I don't want to guarantee that. Because I know that one can run into problems on the way. Bob asked, how does the Quant Cycles indicator add to the Sentient Trader package? Bob, I should be absolutely clear. The Quant Cycles indicator was not produced by me. It was produced by John Rawlins, who's online with us today, and it's not part of the Sentient Trader package in any way. The Quant Cycles indicators, I believe, are fascinating and very powerful and very useful because they take a different approach to Sentient Trader. Sentient Trader takes a pattern recognition approach to analyzing the cycles in the market. It's an approach I've worked with for many, many years. Recently, I've started looking at the Quant Cycles indicators myself, and the combination works very powerfully. But the Quant Cycles indicators are not, at the moment, being offered as part of a Sentient Trader package. Quant Cycles indicators have been developed separately to Sentient Trader, so I hope that answers that question. I believe the combination is very powerful. I found it very useful, but I'll let you discover that for yourself. Thank you so much for joining me. I'm going to bring the webinar to an end. Thank you for your interest in Hurst Cycles, and I look forward to seeing you at our next webinar, which is not about the Quant Cycles indicators. We're just going to be chatting about what the cycles are doing in the markets. So I look forward to seeing you all there. Thank you, everybody, and I wish you, as always, profitable trading.